Hey, good morning, everybody. Welcome to another day. Mark Burt, brought to you by Mike Bjork. Today is Hump Day, and it's May 18th. We got nothing on economic news really scheduled for today, but we do got the FOMC minutes being released at 11 o'clock Pacific Standard Time. Basically, as you'll see coming up, the markets are kind of gearing up for the minutes from the last meeting. They want to see... we'll kind of go out here. Stock market actually started down, but it's actually mixed right now. There's a lot of different things that are factoring into it. They're kind of gearing up for the Fed minutes. There's been a lot of hawkish comments made by Fed members. They want to read into it that maybe they're starting to have some concerns that maybe the Fed may raise rates faster than they anticipated. So look for June. It's right about 18% possibility of a rate hike. That maybe that possibility might go up after reading these minutes. Yesterday, when we got the inflation news, it came in a little higher expected, so that's creating concern that that may also add a little fuel to the fire of possible rate hikes. Oil. And plus with the stock market, it's a little on the high side. So they're figuring the higher prices. Before they get too much higher, they want to make sure if the Fed's going to raise rates, that the concern is that the cost for corporations are going to go up, and they may reduce their spending costs as well as not hire as many people. So we may lose that trend as well in that regards. Also, we got the oil prices. We had oil was going up. It was actually about 48.66 earlier this morning. A report came out around 10:30, actually 7:30 Pacific Standard Time, that basically said that we have a larger than expected oil supply. So look for that to come down, and the stock market could take a direction a little bit from that, coupled with the minutes that come in that could adversely affect the stock market and reverse fortune for them, or reverse their trend. Also, there was concerns, some data came out of the Eurozone heading towards deflation. So there's concerns that they may have the opposite effect, where they might be, obviously prices getting lower and instead of going higher like inflation. It's always good to have a little bit of inflation because people feel good if they're making money, whereas the opposite happens with deflation. Let's take a look here at the bond market. And right now, we're actually lost a lot of gain. Yesterday, we had a price for the worst. We lost about 19 basis points. As you can see, here's our floor here. We broke through both floors, touched off the second one, stayed above there. Today, we actually opened up below the second one, tried going up above it, and then we pulled back. This could change a little bit. Depends on how the market reacts, but if it looks like they're going to be more hawkish, this could be good for a bond market. It could help us boost us upwards, but this could happen later this afternoon. And next level, as we can see here, we were down at this level right around here, and then another little bit of a level here so this would be basically the 100-day moving average would be the next level of support. So that would be right around the 101.80-ish range would be the next level of support. Before we can actually maybe boost upwards. But be cautious here. Definitely might want to look into locking in any rates. Again, we could get a little bit of improvement today once the Fed minutes come in. And if it comes in hawkish, like some of the Fed members have been talking, and then coupled that with some of the data that come in, especially the inflation numbers with the CPI coming in hotter than expected yesterday. It was basically the hottest one they've had in the last 3 years. We could see some improvement in the bond market, as well as the stock market. Of course, that would be at the expense of the stock market here. All right, but if the opposite happened, we could fall down a little bit further, and we could drop down to basically the 100-day moving average, and rates could worsen again. But as of so far this morning, rates have worsened as we're down about 16 basis points from where we left off yesterday. All right, be prepared. Today's going to be a volatile day, and then tomorrow we got, of course, the weekly jobless claims. We'll have more data later this, tomorrow and as well as on Friday. All right, have a good rest of your day. Thanks for watching. We'll see you guys tomorrow. Bye-bye.